Good morning and welcome to this Wednesday, January 29th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, Wall Street rebounded yesterday. It was actually nice to see. There was, in the short term, I think it was pretty important for the market to hold, and it did. Really nice reaction. We did manage, well, we were trying to get through 20-hour EMAs yesterday, kind of came back down at the end of the day. We'll take a look at those charts in just a couple minutes. But first, just looking across the board here, you can see the Dow Jones, after a really rough 4 or 5 day stretch, bounced back nicely yesterday, up 187 points. The S&P 500 up 1%, 32 points, back to 3276, trying to get back up above that 20-day moving average. The NASDAQ did get back through, closed well above the 20-day moving average, rising 1.43%. That was your winner on the day. So a lot of those tech companies, technology actually the best performing sector. Mid caps, small caps all rebounded as well. Small caps had come back down to a pretty key level around 1,000 and printed that doji on the downtrend. A doji is just a candle where basically you're opening and closing at the same level or very close to the same level. And off of a trend, a lot of times that can be a reversal. So we were off of a downtrend, print the doji, and then we went back up yesterday, which was nice. Looking at the individual sectors here, you can see technology. First test of the 20-day moving average since back at the beginning of December. We rallied off of it, which was nice. Financials, definitely not among the leaders here over the past several weeks as the 10-year Treasury yield has been under pressure. We've seen the yield curve moving back towards zero, and that is never a good thing for financials. So we've seen the financials pause. I wouldn't be surprised to see a rally from here. We did bounce yesterday on the financials. Nice day, up over 1%. Communication services also bounced back above its 20-day moving average. Materials bounced but remain in this downtrend. And I'd be a little cautious. We bounced yesterday, but the dollar continues to go up. Materials really needs that dollar to pull back. I don't know, we'll have to listen to the Fed later today. The Fed usually, anything that's interest rate sensitive or dollar sensitive, you want to be careful when the Fed is announcing, especially if there are any surprises. Discretionary stocks, also nice little bounce here, moving higher, up almost 1%. And when you look across, the one thing that was different yesterday when we rallied is that for the first time in a while, we rallied and you don't see any defensive groups among the leaders, which was nice. In fact, if we looked at the, I'll go ahead and pull that up for you. If we look at a sector summary and you look at the bottom of the action yesterday, consumer staples, real estate, utilities, the three defensive groups, all were lower. But the other thing to see is all 11 sectors were higher. That's wide participation in the rally. That's a good thing. And then being led by the aggressive areas is a really good thing. So at least the market in the short term for one trading day anyway did what it needed to do. It rallied, and it rallied on the back of aggressive areas. The 10-year Treasury yield, you can see, let me get a quick update, make sure I got the latest here. Right now we are down almost 2 basis points. We do have the Fed meeting going on today. It's the second day of a 2-day meeting. They will issue their policy statement today at 2 p.m. And at 10 a.m., so in just a little less than an hour, we'll get December pending home sales. And those were up they're expected to be up 0.4%. So we'll see how they come in. But the overall group, home builders, has been doing very well. And when you see this pullback here in Treasury yields, 10-year Treasury yield is really a good barometer for interest rates for housing. And so when you see the 10-year Treasury yield dropping like this, that's making homes more affordable. And usually what you will see is the home builder group rising. And that's exactly what we've seen here. So you got yields falling, home builders rising. Now, you know, when we do rise in the yield, that doesn't mean like we were rising in basically throughout the fourth quarter of last year. And if you go back to this chart, we essentially just went sideways in home construction. So it's a headwind, but it's not like these are inversely. It doesn't mean that just because rates are going up, home builders can't do well. Rates are still historically low. Even if rates go up a little bit, if our economy's strong and we've got close to full employment, home construction stocks can still do very well. And so this is a group that I think one of the best looking groups still in the market. Anytime you go through an uptrend, go through sideways consolidation and you break out, and then you start holding that 20-day moving average, that's a good trend. Here we go sideways, we break out. At some point we'll get a 20-day test and it'll likely be a great entry into home construction. On the flip side of that, when rates are dropping like we've been seeing, the banks struggle. And if we pull up banks, you'll see that since the yields have been falling, let me go back and show you that 10-year Treasury yield again. So really since about the latter half of December, you can see the yields have been falling, and so have the banks. Now, the overall uptrend, I believe, still remains in play. I would kind of want to watch this area. There's a gap support that's been tested. I'd like to see us bounce from here. Because here you got the move up, you pulled back, got the 20-day test, and then we broke out with this gap up. Notice we came down, we tested this area. There's that doji again off a downtrend where we closed near the open. That reverses this downtrend. We're back up. Question's going to be, can we get through this area of resistance right up here, the moving averages? So we got a downtrend in play in the short term. Intermediate term, I think we definitely got higher, and I think even go back longer term off of that December 2018 low, or we could even go back years. I think that we are moving higher. Let's go ahead and just go back a little bit further here. On a 5-year weekly chart, that's the 10-year Treasury yield. On the 5-year weekly chart on home builders, you can see we had the huge run up in 2017 and early 2018. We pulled back, we put in a higher low, and now we've broken out above that January 2018 high. So the long term, we've got higher highs, higher lows. Intermediate term looks good. And look at these 20-week tests. Talked about this a lot with home builders in the past. When we were in the downtrend, I kept saying we have to wait. We got to wait until we get through that 20-week EMA. Once we got through it, you can see the rest has been history. I mean, this is a group that's been up more than 50% the last year. So very, very strong group, very strong outperforming group. All right, I want to talk a little bit about the key indices, and I want to pull them up on an hourly chart. And we'll go back a couple months. Actually, let's go back 4 months. I think that probably will be enough. Yeah, so what you can do, and I did this, I think, in my daily market report for those of you that are EarningsBeats members. But what you can do, and what I normally try to do, is just draw a line that connects the highs. So something like that. All right, so see how all the highs basically are connected. I try to connect the peaks and try to get at least, I mean, obviously 2 points, you need 2 points, but the more you can get, the better. You got a couple here, and then just recently we rode along that line again. So if I take that line, I always like to try to look for channels. And if you go right down to where our lows were, notice this low, which is obviously one of the bigger lows in this uptrend, and then you connect it with the low we just saw, we've got a beautiful channel in play right now. Now, one of the things I wrote about yesterday, and the first big test for the market, in my opinion, it was getting back through not only that moving average, but also the recent lows right here. So here we come down, we set a low, and then we gap down. We go back up, we're filling the gap. This was the prior low. Here you can also see another low and another gap area. So this is a key area. I'm going to say right now the 20-hour is sitting at 32.78. And once we got to that level yesterday, it was straight up. Then once we got there, we just kind of hesitated. Now today I'm seeing green futures. And so it looks like we're going to gap above those numbers. I'm going to just give you those, what I'm showing right now. Yeah, S&P is looking to open up about 8 points. So we're going to go back up about to where the high was yesterday. And that's about where we'll probably open today. And then we'll see what happens. Had a great report from Apple. Going to talk about that chart in just a minute. But that's big. And, of course, we have the Fed on deck coming up at 2 o'clock. So there's a lot for traders to try to digest today. But I can tell you one thing. When I look at the market, and I'll get into earnings in a minute, but I looked at This morning, I looked at probably 30 companies reporting, and 4 of them missed, 2 of them by 1 penny. So that means that 26 of them beat or matched. I think there were 2 that matched. So what's that, 34 or 24? 24 of them, 24 to 30 beat. Now you have to understand the market that we're in, the environment we're in. I hear a lot of people saying, wow, PEs are much higher than what they've been in the past. Well, you have to look at the market environment. I think that gets you in big trouble, just blindly taking a look at the PE right now and where we were. What I would ask is, when you looked at those prior periods, were interest rates near historic lows? Was GDP moderate? Was the Fed sitting on the sidelines while growth is expanding? All of those things factor in, because I would argue that earnings today are much more valuable, especially future earnings growth in this market environment are much, much, much more valuable than what they've been historically in the market. So next time you're at a party, somebody talks about PE ratio, tell them it's not the same. And, they'll roll their eyes, but it's not the same. All right, let's take a look. Let me go out. Let me pull up the NASDAQ. NASDAQ had a better day yesterday. We'll look at this 1 month chart. Now, I did not even look to see if this channel works, but let's just try it. So let's just try and go from here up to about there. That looks like it connects pretty well. And let's just grab that line. If I go right to the low, I would say that is pretty darn sweet. And it looks like, actually, if I drug it back, probably go back to that right there. Right in there is the line. So we know that touched the bottom right there. So that basically is your channel. So the NASDAQ's in it. Now, the thing you have to understand about these channels is that this channel is not going to go on forever. We are in a massive secular bull market rally right now, and they don't just keep going up and up and up. We'll break, and then we'll consolidate for a while, and then we'll later get into another really nice advance. But for now, you've got to continue to we were cautious. We pulled back. I think we've set the bottom. Based on this short-term analysis, I think we've set the bottom. So I think you've got to be thinking about remaining in the market unless this breaks, or getting back into the market. If you got out, maybe you've had some puts, maybe you cashed in the puts with the drop, I don't know. But I would be looking to be somewhat bullish or still pretty bullish given the current uptrend that we're in. So 3 to 4 months, we came down, we tested this channel line. And so as long as this channel holds, that doesn't mean I would just stay in no matter what. If we go back and we take out the lows that we saw earlier this week, basically last couple of days here, if we go back and we take those out to the downside and we lose this channel line, NASDAQ, if you see it back down 90.75, 90.50, definitely grow more cautious in the near term, because we'll be searching to try to find a bottom. What we could see is an A, B, C correction. And that next correction could really throw a wrench into what we're looking at here in terms of this channel line. Okay, let's move on. I want to talk a little bit about earnings. Well, maybe a lot about earnings. Got to start with Apple. So let me go ahead and pull up Apple. The number was very strong. Last time I looked, Apple was up another 2.25% pre-market, breaking out to another high. The number I would watch for on Apple, just to make sure that it's opening above, would be 320.25. I think if we open above that level today, that would be a good sign. If we open above it and you see a big red candle print, then I would be much more cautious. But if we gap above, have our normal pullback intraday, and then rally again toward the end of the day, that is likely just a continuation here to the upside. Volume is going to be big, so I think where we close today will be important. Are we continuing the rally? or are we printing some kind of a topping candle, or are we failing to break out with big volume? That would be a more of a short-term bearish sign. Let's face it, if Apple goes down, the S&P 500 is going to struggle. Not that it can't keep going up, but Apple's been the leader. Apple's the largest weighted stock in the S&P 500. So if it goes down, chances are the S&P is going down with it. All right, let's see. What else do we have? I wanted to pull out a couple of these reports I thought looked pretty good. So Stryker, SYK, and by the way, Apple's report was just off the chart. I mean, their iPhone numbers crushed estimates by 4 or 5 billion. I mean, it wasn't even close. Their wearables came in ahead of expectations. Services was the only thing came up short, and it was barely short. So the overall report on Apple was huge. Bottom line, $499 versus $454. So back on, let me go in here and just show you this article that I wrote last week. Right here. I'll guarantee you the upcoming earnings performance of these two giants. First one was Apple. Will blow away estimates. That one came through. And then the other one, M3M, will miss its estimates. It missed by 15 cents on the bottom line. Revenues came up just slightly lower, just slightly. But look what happened to 3M. This is why we pay attention to relative strength. Relative strength. Wall Street is telling us. It's like being in the meetings with the analysts and management by watching the charts. Now, it doesn't work every time because there's a human element involved. You've got management teams that may not be forthcoming to Wall Street. They may not want to say, hey, you know what, we're having a rough quarter. They might want to sugarcoat it. That's a human tendency. So when the numbers come out, sometimes it's a little different than what Wall Street was expecting. It's not going to be a perfect system, but I think, going through these over, the last, going over this relative strength, we've been going over it a lot the last couple of years, especially the last 4 or 5 months since I've been back as chief market strategist here at EarningsBeats. Hopefully, if you're holding into earnings, it's one of the first things you look at. How is my stock performing relative to others, especially others in its space? Wall Street's placing bets, and you need to know what those bets are. All right, let's go on to AMD. AMD came through with a pretty nice report. They beat on the bottom line, 32 cents versus 30. They beat on the top line barely, but they beat $2.13 billion versus $2.11 billion. They guided their quarter one revenues lower, but their fiscal year 20 revenues higher. So they're seeing a little softness in the upcoming quarter. And what I've said many times in the past is I would rather have a company beat top and bottom line and then maybe issue a little bit of cautiousness than the other way around, to miss, and then promise again, over-promise. So it's going to be interesting to see how AMD performs today. It's down 4% in pre-market, which would be a couple bucks. So we're probably looking at $48.50, something like that. The 20 days at $48.75. Do we see buyers come back in on AMD? The reason I'm saying this, you've got higher prices, you've got a lower PPO, you've got that reversing candle. We're going to get a gap down with earnings. Do we bounce back, or is it just continuing move to the downside? I don't know. We'll have to wait for that. But if we do gap down and you see a big hollow candle and we come right back up again on heavy volume, that'll tell you that this run in AMD probably is not over. And by the way, for those of you who follow the strong earnings chart list and are members at EarningsBeats, I can promise you AMD is going to be on this strong earnings chart list next quarter. Even if it gaps down, even if it moves back down the 50-day moving average. They beat top line, they beat bottom line. They've got a great uptrend in play. And when we look at the relative strength on AMD, it's one of the strongest stocks in semiconductors. So even if it pulls back temporarily, it's still going to be on the list. eBay. I talked about eBay in the webinar the other night. Said eBay didn't look very good. It was one of probably, 8 or 10 that I talked about that didn't look good. The stock is down 5%, almost 5% in pre-market. They did beat top and bottom line, but they guided quarter one revenues lower and fiscal year 20 revenues lower. So here we were trying to battle through this upper resistance line, couldn't make it. A lot of big movement to the upside, big volume for a couple of days, but I wouldn't use that as my determination for how earnings are going to come out, I would use this. And you can see on a relative basis, eBay near a 52-week low, recently hit a 52-week low versus its peers. And why? Well, we found out they lowered their revenue guidance for the quarter and the year. It's going to be interesting, though. I want to watch this because if we get a hollow candle, I mean, we're going to be down probably, let's see, 5% would be $1.80, which would take it down to 34.41, which would be right in here. I'm going to give you a number to watch on eBay. If it opens above 34.42, at or above 34.42, and goes below and then comes back up again, I think the bottom is probably in on the stock. That's a bold call, but let's see where it opens. That'll be one to watch. I love watching how these companies trade around earnings. And, you know, it's mostly based on experience, but when I see key support like this that's been holding, I go to the lowest candle body, and then I like to see where they open. Notice that eBay is going to be right down here near this support. Do they open it above, below? I think that's a big factor that you want to know. And to me, 1 penny can make a big difference. And again, just based on experience. Another one that's going to be very important to watch today is going to be Xilinx. This was a sleeper of mine I picked in the top 15 for 2020. And it wasn't because of relative strength, and it wasn't because of a breakout. A lot of the others I picked were basing. This one, I'll come back to this chart, but if I look at it on a long-term chart, it's been in a long-term uptrend, but it just got too far ahead of itself. It's a 5G stock. You know, it was just going up and up and up based on hype and some pretty good numbers as well, but a lot of hype, and it's just taken a while for this stock to kind of grow into its market value. And today, it's going to be challenged. The stock came up short on revenues. They did beat bottom line, 68 versus 64, and their revenue miss was just slight. But they guided Q1 revenues lower, and they mentioned that there's a slowdown in the 5G market. And so the stock right now is down 8%. It's probably going to open somewhere around 90. And notice we've got support down at 88 and change. I think the lowest candle body here is 88.51, and that's 88.93. So 88.51. We could gap down and then have a big recovery. Very interesting looking chart here on Xilinx. Maxim, really good report on Maxim. Let's bring this one up. All right, so this one hadn't really been performing with the semis, so it's going to be interesting to see whether or not this is some sort of a breakaway gap to the upside. Maxim is trading, well, pre-market was trading about 3.25% higher when I saw last. So we're talking about $1.80. That would be around 65 or 64 bucks or thereabouts. And check out where these overhead resistance areas are or levels are. Just at 64, Maxim. Watch this high right here at 64.20. If it opens above it, that could be a really good indication for you. All right, what else do we have here? MRCY. There really weren't many upgrades and downgrades. I'm just skipping over. I'm going to go through a lot of these earnings reports before we go into the three you must see. MRCY, look at the relative strength here. Pretty bad, right? Well, they came in and they did beat barely on the revenues. They beat pretty handily bottom line, 54 versus 48, but they guided Q3 revenues and earnings per share lower. I have not seen a trade. I hadn't seen a trade as of, I don't know, 30, 45 minutes ago on MRCY, but based on the guidance, I would suspect we're going to move lower. Do we hold this rising 20-day moving average? If we gap down, hold the 20-day and rise back up again, that would be a good sign. If we don't, then I'd be careful. Again, they beat top and bottom line, which is good. They lowered. Maybe they're just being cautious going forward. That's something to watch. I want to see the earnings reaction today on Wall Street for this one. MTSI, this was a really good report. Easy beat on the bottom line, 119 million versus 115 million. Bottom line, they more than doubled, 7 cents versus 3 cents. They guided Q2 revenues and earnings per share higher. The stock is up 11% in pre-market. So here it comes down. This scares a lot of folks right before earnings. Oh, somebody knows something. Well, you're right. They do know something, but what they know is that, keep in mind that when a quarter ends, you go through a quiet period. This time right in here, analysts aren't hearing anything from the company. It's illegal. So what you have to do is look at how the stock was performing heading into the end of the quarter. And as you can see, this stock was up near a 52-week high relative to one of the strongest industry groups in the market. So the pullback here, while it might have scared a lot of folks, looking at the chart, I think it looks pretty darn good to me. All right, so really nice report there. Going to be gapping up 11% from 26, what is that, 262 and that's 288, 28, 29. It's going to open around 29. So it doesn't look like it's going to make that breakout, so we might see more sideways consolidation, but I would definitely keep an eye on this stock. I believe eventually we're going to get a nice breakout here. One other one that I mentioned the other night in the webinar I loved was Rexnord, RXN. And you can see relative to the industrial machinery, just setting a 52-week high. They beat top line, they beat bottom line, they guided fiscal year 20 earnings per share higher. Did not see any kind of response, but I got to believe that we will be moving higher, maybe gapping up and breaking out again. Another smaller company, I think I had mentioned this one in a daily market report recently, Costamare, CMRE. Stock had gotten hit pretty hard. This was a huge winner for a long time, a big, big winner in marine transportation, and then all of a sudden got hit hard and put in a bullish engulfing candle. Talked about this on Stock Charts TV yesterday. Bullish engulfing candle, that reversed things. Stock was up another 2 or 3% this morning. I didn't see their revenues, but they beat bottom line. I think they beat on top line as well. I just didn't see the numbers. 32 cents versus 28 on the bottom line. Stock was up 2 or 3% in pre-market. Maybe we're going to get a nice little recovery here, at least maybe to go up and challenge those overhead moving averages. Those were all reports from yesterday. I could spend so much time going through earnings. Today, we've got a pretty good reaction out of Boeing. Boeing reported. The numbers weren't very good, and I don't know that this is going to stick to the upside. We'll see. But Boeing was looking to open up about 3%. GE, the other night I said, I can't believe I'm saying this, but GE looks really good going into its earnings. Well, GE beat top and bottom line and is up 7.4% pre-market. Look at the relative strength, 52-week high. 6 months ago, 5 months ago, 52-week low, wasn't looking that good. That was, now that we look back, an exhaustive gap to the downside. Have very heavy volume, went back down double bottom, and now we're trending higher. GE looks much better to me. All right, let's take a look at the 3 you must see. And I'm going to go into first one. This is a company that will be reporting, I think, coming up soon. MMC, breaking out yesterday, volume picking up, and it is one of the top stocks within the insurance brokers group. I think this is a company you want to watch heading into earnings. I suspect the way that it's trading, I mean, when you get a company that breaks out to a 52-week high with what we just went through, with the market, with just about everything gapping down yesterday. This one gapped down, but it came rallying back and the volume was heavy. I think that's a pretty good sign, and especially knowing that it's a leader to begin with. Next up is Hilton Worldwide. They report in 2 weeks, and I suspect they're going to have a really good report. Here was the big move up throughout their last quarter. Look at the volume picking up on these moves. Now we're consolidating, got a little bit of a head fake to the downside, almost a doji off that downtrend. Then we rally back yesterday. I suspect we're going to consolidate, but I expect a big report. Look at Hilton versus its the lodging area of the market, 52-week relative high. And then the final one for today is Graco, GGG. Look at this double top. We came out with earnings yesterday, biggest volume of the year, gapped up above. Probably going to get a pullback, but this didn't just start yesterday. Look at the relative strength that was building into the earnings report. And look at the volume coming in. I think that is Wall Street accumulation. And now we see why. Stock comes out, breaks out with good, strong earnings. And if you look back here on a weekly chart, that, we went sideways, we broke out, had a little downtrend. Now we are clearly trending higher, breaking out again. Very strong PPO. I think GGG looks good. All right, that is it for today. I want to thank everybody for tuning in. I'll be back tomorrow on Stock Charts TV for Trading Places Live. And I'll be back here at Earnings Beats for Trading Places Live next Monday. Hope you can join me. Everybody have a great day, and I'll see you next week here at Earnings Beats. Happy trading, everybody.